Okay, so elements of statement of profit or loss. So we have already discussed about the profit or loss, right? Today we are seeing the elements. So first one comes revenue. Revenue is what? In the normal course of business, whatever the inflows you get by selling goods to the customers, which is a regular activity, regular operating activity of your business, is nothing but revenue, right? So under revenue, like what happens? You deliver, you produce goods, and you sell goods, or you give services to someone. In either of both the cases, you charge some money to them, and that money what you charge is something which is revenue. Which, if adjusted, that means if all the expenses are deducted from that, it becomes the profit. Correct? So revenue is nothing but it is excess. It is nothing but like the cash inflows generated in the normal course of business through the operating activities of the business. Correct? Now, so here there is some point here under ASC 606. This is the accounting standard as per US GAAP. Revenue is to be recognized in the accounting period in which the performance obligation is satisfied. What is performance obligation? This is Mr. X and this is Mr. X customer. Okay, and customer approaches Mr. X for goods, and Mr. X agrees to make like deliver the goods to the customer. So Mr. X performance obligation is to deliver the goods, and Mr. C's performance obligation from his part would be to make the payment. So Mr. X will receive consideration for the goods whatever he has transferred or whatever he has delivered. So both of them are bound. So the contract between them is the contract of sale. Okay, and they one is like delivering the goods, another guy is making the payment. Fine, and that is the performance obligation what the seller has towards the customer. So revenue is recognized to depict the transfer of goods. So what the seller has done is he has transferred all the risk and rewards related to that particular good to the customer, and he has charged something for that transfer. Correct? That consideration is revenue. Now, what is gain? See, gain doesn't happen very often. So gain is something resulting from transactions that are not a part of company's main or central operation. See, you sell goods on daily basis and you generate revenue. It's a routine activity for you. You sell some asset or some investments. You sell it on daily basis or once in a while. You do it on once in a while. Correct? For that, if you get a higher amount, it's a gain. Right? So gains can be the increase in the value of asset, or after selling the asset, whatever the profits you are earning out of it. That means there are two things: revaluation gain. See, revaluation gain is not there in US GAAP, but IFRS has that. Okay, I'm very particularly telling you, revaluation gain is not there under US GAAP, but in the world of accounting, it is something which is existing. So I'm trying to give you an example. Now, what happens? What will happen after reading this entire text? You'll be wondering, in the class, revaluation gain concept has been discussed, but we did not find that anywhere in the book, and you'll ask me a question. So let me be very clear. Revaluation gain is nothing but if you are holding some asset and after 4 to 5 years you want to know what is the value of that asset in the market, you come to know that the value of the asset has increased in the market, but you are still holding that asset, not selling it. So there is a gain, and that kind of gain is a real non-realizable nature gain, which has to be shown in the other comprehensive income section as per the IFRS. But as per US GAAP, they won't recognize upward revaluation. They only recognize downward revaluation. That is impairment loss. I will come to that impairment loss. Don't worry. I'll come slowly, steadily. I'll come to that topic. Okay. So revaluation gain, and like under IFRS, you show that in the income statement, but under the OCI section. But profit on sale of asset is shown in the statement of profit profit or loss account. So both of them are gain, which are not, which you do not earn in the normal course of business, but once in a while. Okay. So increase in the value of asset is a income or gain. See, the difference between income and gain is income you earn through routine activities, gain you earn once in a while. Okay. and increase in the value of asset and decrease in the value of liability. So if the liability decreases, ultimately you will gain from that. Okay, so these two are the ones whereby you can expect gain or incomes. Fine. And like that means you had an obligation to pay $100,000. Now they have just given you some some relaxation. That means they're asking you to make the payment of 80,000. So 20,000 is kind of gain only for you. It's a saving for you, correct? So reduction in the liability. And what we say expenses. See, I will say you every expense, every cost, every expense, every expense is a cost, but every cost is not an expense. What do you mean by this? Anyone, can you give me a clue? See, salary is paid. Salary is paid is a cost or an expense? Come on, tell me.
Salary is expense in the company.
Is it a cost or an expense?
On which perspective, sir? On the employee perspective or it's an company perspective?
From the company's perspective, company is paying the salaries to the employee. For employee, it is an income, na?
Yes. Employee, it's an income. For a company, it's an expense.
Then how is it not a cost?
Yes.
Yeah.
Then shall I like treat it as a cost or an expense?
That we can show in the income statement. It is we show in the expenses only, sir. Salaries paid.
Yeah, see, every cost which you show in the income statement is an expense. Okay, any cost which you are showing in the income statement is only an expense. Not every cost you will show in the income statement. Let's say opportunity costs. Do you think opportunity cost you can show in the statement of profit or loss?
No.
No. Why? What is an opportunity cost? You become a CMA. You can start. You can you can become a consultant, a freelancer, or you can work in a company. Okay, as an analyst or as a financial controller or anything. You opt to do a job, and like you leave the opportunity of doing a practice as a consultant. Okay, so since the opportunity is lost, why the opportunity is lost or skipped? Because you want to choose the best out of the rest. Understood? What is better for you, you want to opt that. So if you think that job is a better option, because if you work in a company, you don't have any risk of starting a firm, investing your money, investing your time. 5 to 10 years down the line it will take for you to establish your firm. Till that time you have to be like, you should be very patient, correct? And if you have a family like lineage, like your father, grandfather doing some firm, you by default get good customers, and they will introduce you to their old clients. And that's what you better know what your clients want, because your people know what the clients want, correct? So accordingly, for clients it would be easy if they like continue with the old ones, and for you it is very easy because you get the clients ready made. But like what about if you start a new firm? There are a lot of challenges, so you opt to do a job, so you lose the opportunity of starting a firm. Okay, because you have opted for job, so that has costed you because you're not earning that income. But these kind of things cannot be shown in the income statement. Why? Because you did not pay anything from your pocket to skip that option of becoming a consultant. Am I right or wrong? Please tell me.
Yeah.
Yes, did you pay any money for that? You did not pay, so it's not a cost. So it's not an expense, because expenses are something, if you pay something from your pocket monetarily, if it's a monetary transaction, then only it will be shown in the statement of profit or loss on the books of accounts. Okay, so every expense is a cost, but every cost is not an expense. That's what I said. So whatever the costs are existing, you cannot take it as an expense, but every expense what you're showing in the P&L is definitely a cost. That's what I wanted to explain. So I think things are clear for you. Shall we move forward?
Yeah.
So expenses can be decrease in the value of asset, decrease in asset, and increase in liability can create expenses for you. Why? Because if you take more loans, you have to pay more interest. So that creates an expenditure, correct? And losses also happen once in a while. Let me tell you, you sold some asset and you are not in the business of selling assets. Of course, your business, what you maintain or you run, your routine activities to sell inventory to your customers. So once in a while you sold some asset, some property which is far away from your business. You wanted to use it for the future, but it's not giving you satisfactory. There's no gain in that property satisfactorily. It's not growing as you expected. So you want to sell it and you're selling in loss. It's a one-time thing which is happening. Henceforth, it should be accounted in the statement of profit or loss as a loss. Okay. Now, other income statement items, unusual gains and losses. Unusual gains and losses happens once in a while. That's what I said. It doesn't happen on daily basis. Okay. What do you mean by discontinued operations? If you want to sell a business, you cannot sell that business directly. You have to first show that as held for sale category. What is that? Held for sale category, and then you can sell it. Okay. So if you really sell that business, that means the intention is very clear that if you are putting some business in this category, the intention is clear that you want to discontinue that operation. Correct. So from that discontinued operation or the business you are not willing to continue with or you want to sell, you will sell it either for a gain or a loss. If you get a gain, you have to pay tax. If it's a loss, you did not pay tax. Okay. You can carry forward those losses. That means next year whatever this year your tax is saved. Okay, there's a saving. But next year whatever the profits you get, you can reduce those profits with these losses. Okay, and you can pay the tax on less amount. Correct or wrong? See, what is the treatment for loss under taxation? Carry forward. What is that?
Carry forward.
Carry forward, and you can set off that from the next year's profit. See, next year you get 1 lakh profit, 100,000 profit, and the loss of this year can be deducted from that profit, and then you have the net profit as this one. Correct. Now you can pay taxes on this. So you saved taxes by how much? Let's say tax is 30%. So 20,000, 30% is how much? 6,000 you saved your taxes. Am I right or wrong? Because of the previous year loss. Please tell me.
Yes, sir.
So it's
Yeah.
a tax benefit. You can use it as a tax benefit or not?
Yes.
Yes, of course. Yes, Pramod, are you following? Hello?
Yes, sir.
You're following, Pramod?
Yes, yes, yes.
So I think you people may be knowing about taxation and all. You have studied in the graduation days. Fine. So here we are. Income from, already we have discussed this in the income statement format when we were doing that in the previous session, correct? So you have income from continuing operations, then you paid taxes, you get income from continuing operations, that is net income, I have to say. Okay, this is before taxes, this is after taxes. Then there's a discontinued operation. You want to sell some business, and from that you got a gain, you record. If you got a loss, you record. And if it's a gain, you pay the tax immediately this year. If it's loss, then you have to carry forward next year and set off from the next year's profit and pay the taxes. Okay, so that's a benefit for you. Okay. Disposal of a component or group of components that represent a strategic shift must be recorded as discontinued operations. As I said you, some business which is not doing well, some business the company wants to sell because it thinks it has a burden. Company has a liability which it needs to settle, and it thinks that some of the assets which they hold is not that worthy, so they can sell that asset and they can settle off the liabilities. So in these all circumstances, they sell the assets, and in that way they get some gain or loss and they record it. So they are saying that taxes also you should show separately. You see, we had PBIT, we have PBIT, let's say I deduct the interest, we get PBT. Everyone agrees with this? Hello?
Yes. Yes, sir.
Yes.
Then we remove taxes, we get PAT. So this tax we have removed here. After getting PAT, we show discontinued operations, and there whatever the gain or loss we get, there we settle the taxes for that discontinued operation transaction. So it is separate, it is taken after PAT, correct? So that is shown separately or that is shown collectively under this? It is shown
Separately.
separately. Yeah, that's what we are discussing. Now let's see about the benefit of income statement. See, income statement, what does it show you? You are, suppose you are an investor, you hold the stocks of Kotak Mahindra Bank, and you are checking the income statement of Kotak Mahindra Bank. What do you analyze from that? If the Kotak Mahindra Bank is in profits, do you think your future is bright in that company? Can you predict that company's future? Yes. You can expect some good cash flows to be generated in the future from a profit making firm, correct? Yes. But there are certain limitations. Net income is an estimate that reflects a number of assumptions. See, you get net income after deducting all the expenses from the revenues. Am I right? And your expenses, many of your expenses are based on your estimates. Like if I say bad debts are based upon you make a provision for bad debt. Is it right? Do you make provisions for bad debt in a business? See, suppose
Yes.
you have a company and you sell goods to people. You expect some people not paying you back the money. What do you expect from them? Isn't it so? So you
Uh-huh.
make some estimates. Every business knows that some of the money would be lost. So they make an estimate. So these estimates are what? Are they realistic? No, estimates are based upon your assumptions or your past experience, what you have seen. Like, okay, I sell 1 lakh worth of goods and every year I lose 10,000 rupees worth of money from that. So you expect 10%, but it can be 15 or 20 also in a year. Am I right?
Yes, sir.
See, can you see if you see the company's profit, net income or profit, can you blindly trust that this is the performance, this is exact performance measure of a company? No, you can't.
No.
You can't. Why? Because the company has got that profit based on many assumptions. For bad debts, they have created a provision based upon their estimates. Do you think those estimates are exactly like some as per some standard? No, no standard in the world tells you how much you should estimate as a bad debt. You do it on your accountant does it like with this experience what he's been seeing since many years. But you know what I estimate, suppose I estimated that tomorrow there will be rain, but if tomorrow there is no rain, then my assumption is not realistic assumption. In the same way, whatever the estimates they make are not exact ones, those are approximations. Next.
Sir, why does they do that, sir? Because if an
They have
another
to do
state.
that. Suppose you think suppose I am running a academy, okay?
Uh-huh.
So I in a year I just teach 100 students, correct?
Mm-hmm.
So I expect fees from them. So it's not like every student would pay me fees on the spot on that day in advance, correct?
Yes.
There
Yes.
are many students who want some convenience. Of course they pay, but they want installment facility. Is it so?
Mm-hmm.
So what happens is, like I myself have experienced, like in the previous past, many students have not paid my fees at the end. In fact,
Okay.
they were just dragging till the course, and when the exam and they may have some financial problems, they may have some different intention. I don't know. See, like when you study at some place, if you don't pay a fee to that to the teacher or something, it's not good. It's unethical, correct? But
Yes.
there are some people who do that. I have personally experienced. Okay,
Okay.
so what happened? And yeah, I have seen some very good people. I have seen some very good people whose children have studied at my place. They have finished the course, and the parents have requested me that I'll make the payment next month because I have some insufficient money. and you won't believe they came here and they made the payments. Okay, so we thought that we lost that money, gone. Now he, like, that guy was not lifting my calls, or he was not responding to me, but he came one fine day and he like apologized for his for whatever the delay, whatever happened, but he paid the entire amount and he went. So that many times it also happens like that. So you won't believe, every year 50,000 rupees I lose because of the non-payments from the student side. So since 5 or 10 years I have been seeing this. So what I can say, suppose if I earn 5 lakh rupees per annum, of that 10% I'm almost losing every year, correct?
Yes.
So can I put that as my estimate? Based upon my past experience, on an average I'm losing this much. But do you think that it is going to be the same thing this year? This year my revenues have increased, more admissions I've gotten. 7 lakhs is what is my income, is my revenue, what I'm generating. And I still put 10% estimate, but it doesn't work out. 90,000, 1 lakh rupees I lost as a bad debt. In reality, it can happen, na? So my estimate, what I've made, may not be satisfactory. I have done some under provision. What is that?
Under provision.
Under provision, see, under provisions can happen, over provisions can happen. Okay, so those can be adjusted. When you'll be studying the chapter called accounting for receivables, you'll be learning that. But
Okay.
my estimate cannot be always right, na? That's what they're saying. So you cannot
But
completely believe the income statement.
sir, but the big fishes in the market who are earning in millions, if they show this kind of number, if the estimates, does that not making a fool of the stakeholders?
See, any big fish in the world may have bad debts. Correct? Amazon may have bad debts.
Yes.
Microsoft may have bad debts. There are some very less businesses which you won't expect having bad debts, like DMart. DMart is a supermarket chain, correct?
Yes. Yes.
So do they give any? Do they give credit to anyone?
No.
Not
No.
required, not necessary, and not at all. No policy of that company to give
Give it. Yes.
like credit to anyone. So it depends from it. It varies from business to businesses. Okay, from company to company. Some companies they give credit, some they don't. That's it. Oil companies have different policies. Manufacturing concerns have different policies. See, it depends, na. We are just generalizing the things here. That's it.
Oh.
We're not specifying specifically. We're not speaking about some sector. Okay, just general things.
Okay.
Yeah, income numbers are affected by accounting methods used. Yes, for example, difference in methods of depreciation. Of course, like many firms will be using many different methods. Some will be using straight line, some will be using diminishing balance. So you being an investor, sometimes if you want to draw comparison, you would be like sometimes uh, not able to compare the results. Why? Because different methods have been used. Correct? Suppose I'm seeing that I want to invest in these two companies, but when I see the results of this company, it seems to be good, and this company's results are not good. They are using straight line method for depreciation. These are using diminishing balance method. Maybe because of a method, the profits may vary here and there. Correct? In straight line method, the depreciation amount is same every year. In diminishing balance, the depreciation amount in what happens? It decreases every year. Correct?
Yes.
So since the diminishing balance decreases, the method, just a second, the profits are less here and the profits are more here. Because of diminishing balance method, the profits may be high. Because of straight line method, the profits may be less. That is because of the methods which you are using, not because of the performance. Correct?
Right.
Yes.
So in those times, the comparison becomes tougher, and you may not be in a position to decide which company to choose or pick for your investment. Income measurement requires judgment. For example, amount of depreciation expense recognized during a period is depend on estimates regarding the useful life of asset being depreciated. Of course, see, sometimes income measurement, you measure whatever the depreciation expense you show in the income statement is based upon your estimates. Some see, you say that 10% is what I will depreciate. Why not 15% then? It can be, na? It can be correct. Do you think
Right.
10% is the only rate at which your asset would depreciate?
No, sir, it can
No.
increase. It can
Yeah, it
increase.
can be more or less, of course. So that is also a problem. Items, see, something which you cannot show in the income statement, but still are important for you, correct? That is brand recognition, product quality, all this matter or not. Because of good quality, you are getting high revenues, but you can't show that. Income statement is limited to reporting events that produce reportable revenues and expenses. Yeah, something which cannot be shown in the income statement, but still that may be relevant or important for you, but it has no, it doesn't find place in the income statement. Next, we would discuss about the other comprehensive income, and here we are. So net income, comprehensive income is here. Net income, part of comprehensive income, because you make your net profits. Just a second. Just a second. So this is your net profit. After making your net profit, you add other comprehensive income, okay, and you get total. Like what we say, you get SOPL, statement of profit or loss, and other comprehensive income. Okay, the total. See, suppose my net profit is 100,000, and I have added some other comprehensive income items as 20,000. So what is my total? 1,20,000. This is total of SOPL and OCI. Correct or wrong?
Yeah.
That's what. So now you will be seeing some examples of other comprehensive income section. As I have already explained you, there are certain items which you cannot show in the income statement, but you can definitely show them in the other comprehensive income section. And I have also given you the reason which kind of incomes you cannot show in the income statement. And since you cannot show in the income statement, you have to show in the other comprehensive income section. Why this other comprehensive income section has come into picture? That should be a question to be asked, correct? So out of curiosity, see what happens. This is your equity. Equity has many things like share capital, share premium, and like I can say, let's say, revaluation gain is not there because you find that only in the IFRS. You don't find that in the like US GAAP. So retained earnings is there. Then some reserves you will see. So these are all part of equity, correct? Now your equity can increase in two ways. Your equity can increase in two ways. Either your equity can increase by issuing additional capital. What is that?
Additional capital.
Yeah, whatever is existing with you, to that you're adding more capital. So this can increase your equity, or else your equity can also increase because of increase in the retained earnings account. So
Yeah.
which one shows the equity is increasing because of performance and because of non-performance? This is due to non-performance. This is purely due to performance. Am I right?
Perform. Yes.
And there are certain other expenses or incomes which are not which are also not something like you are getting a gain because of your business operation. Suppose you are holding a stock of some company and its value is increasing. You are not selling that stock. The intention is to hold for some period of time and then to sell it. So where will you show the increment of the stock, the increase in the value? You will show in the other comprehensive income section, correct?
Yes.
You cannot directly add that to the equity. You cannot directly add that to the equity. You have to show in the OCI and then that will be transferred to the equity. Okay. So what I mean to say, does the increase in the value of the stock is because of your business operation or because of the investments doing good?
Investment.
Yeah. So you are differentiating. You are differentiating what the increase in the equity due to performance measures and due to non-performance measures. Understood?
Got it.
You are the reason for making other comprehensive income section or other comprehensive income account is to show the difference, like the difference between the increase in the equity section due to performance due to the firm's performance or non-performance. Okay, that's what. So here there are certain you will see certain items which will be showing under other comprehensive income section, like foreign currency translation adjustments. See, Suppose you have a company in India and you also have a firm in United States. So what happens? You do consolidation in India. You know what is consolidation? Showing you make group accounts. What is that?
Group.
Group account.
So what you do is the assets of this business and assets of this business you have to add. This is in dollars, this is in rupees. So you have to convert the dollar into rupees. In that you can get some gain. But that is some gain which you are not realizing. That is, money is not coming in your hands. But still you can see some gains because you will be translating that in Indian rupees, correct? So that means when you took some asset for $100,000, that point of time, rupee was how much? 75 or something. Previous year, how much?
75.
75. But this year, the value of a dollar is 82. So do you think like you have the asset, the conversion of that asset in terms of dollar into rupees is giving you some gain? Please tell me.
Yes, sir.
Yes, so
Yes,
that kind of gains have to be accounted where? In the OCI section.
OCI.
So
Okay.
gains and losses on foreign currency transactions and gains and losses on intra-entity foreign currency. So all currency related transactions whereby there's a difference created and that is benefiting you, but you're not realizing money in your hands or cash flow is not coming in your hands. You have to show in the OCI section. Then gains and losses on derivative instruments. Derivative is nothing but futures, options. So generally, if you don't have an idea about this, you can leave this. I'll explain you that afterwards. It's a lengthy session. It's a very lengthy concept. Okay, but one thing you can keep in your mind, one base, that what you're writing, there may be some changes in this derivative instruments when you bought it and you're still not selling it. Correct? Are you selling this? No, you're holding this, and the changes in that, whatever happens, is nothing but some unrealizable nature income. So you have to account it. Am I right?
Yeah.
See, you are an investor in a company, and company is earning some profits of $100. What will company do? Company will company will retain. What will company do? So everywhere this is going on backside, huh? So what will company do? Company will retain like $80, and company uh, will pay $20 as dividends. Correct? Whatever the
Yes.
company has retained, it will what it will do?
Before the matter.
Reinvest. Correct?
Yes.
So wherever the company has reinvested, it is whose money company is reinvesting? Shareholders' money. So
Hmm.
that reinvestment, whatever company has done in some stocks or some asset, its value is changing. So that has to be accounted or not? Please tell me.
Yes.
Yes. So that can be accounted in OCI section because in
OCI.
balance sheet you are showing the market value of that, the increased or exact value of that. Correct?
Yeah.
Now, unrealized holding gains and losses on available for sale debt securities. Yesterday, I explained you about any unrealized gains, holding gains, whatever it is. Put it into that. Put it into this account. Fine?
Right.
Understood? Yeah.
Yes.
Wherever you go, they'll be speaking the same language. So now this is done, and next comes the statement of income and comprehensive income. You can see it started with revenue, then COGS, gross profit, then all the operating expenses removed. You got operating income, also called as PBIT. Then you took all the realized non-operating gains. What is that?
Operating
Non-operating gains.
losses.
Non-operating gains, realized gains. But there can be there'll be some standards whereby some rules would be there. I will explain you afterwards. Unrealized gains or losses, equity securities. This is a special standard which we have to learn. When we enter into the chapter called accounting for investments, I will explain you that one. Okay. So this is which kind of securities they are speaking is trading securities. What is that?
Trading security.
What do you mean by trading securities? The intention is very clear. If you get a customer today or tomorrow, day after tomorrow, or after 5 days, 10 days, you immediately want to sell. What do you want to do?
Sell it.
So see, there are three types of securities. When I was taking the class, I explained you. One is held to maturity. One is
Available to sell.
available for sale, and one is
Trading.
trading. So trading securities is the intention is the intent is very clear. You want to sell it immediately when you get a customer. So any increase decrease in the value of trading securities should be shown in the P&L account. Did I say that? Not in the OCI section. Did I say that?
Yeah.
Yeah.
Why you want to do that? Because the intention is that you want to sell it in the active market. Okay, you are maintaining a trading desk whereby you conduct auctions and you sell these securities. Are you getting my point?
Yes.
Yes. So the intention is very clear. If you get someone in 1 second, immediately after 1 minute or 5 minutes, you are ready to sell. So any increment in that should be shown in the P&L. But only realized gains or losses from available for sale debt security should be shown in the statement of profit or loss. But if I speak about this available for sale securities, any unrealized income should be shown in
OCI.
OCI. Why? Because the intention is to hold it for 4 to 5 years, and you're not going to sell it sooner. Okay, you're going to sell it later, so you will show that. And what I explained you can see that point here. Then any kind of non-operating incomes will come here. Then PBT, then less taxes, PAT. Then you get the other comprehensive income section. Okay, and yeah, you are selling any unrealized gain on debt securities which you are holding till maturity. Okay, and reclassification adjustment for gains included in net income. This, what is this? I'll show you afterwards. Then this is other comprehensive income you got, and this is the total 2125 plus 97 will give you this. Okay, don't go for this. This is like basic EPS, diluted EPS, and if you go through this also, need not worry, because already in ratio analysis we have discussed about how to find out basic EPS, diluted EPS, how to find out Vanso, everything. Did we discuss or not?
Yes, sir.
Yes, sir.
Yes, yeah, this is nothing but after getting the other comprehensive income, they find out the EPS of the company, what is the earnings per share, and they let the investors know what is the earnings per share, what investors have secured. Okay, that means if you are an investor, you definitely want to know what is the EPS of the company. Am I right? In which you have invested, isn't it so?
Yeah.
Don't you want to know EPS of a company in which you have invested?
Yes, sir.
Why
Yeah.
you want to know that?
So that
To
we
know
can
the
invest
performance, to know the
performance.
performance, yes, to really know in the company in which you have invested, how is it performing. If the EPS is increasing every year, what more than that you want? It's a
True.
performance parameter, correct? Yes.
Yeah.
Just look, have a look at this. We'll move forward. Then comes the statement of changes in equity after this. See, can I do one thing, if you don't mind? I have 5 minutes, and really speaking, in 5 minutes I can't finish this topic.
Okay.
I cannot. It will take more 30 minutes or 35 minutes. I have a very good explained video of this. Shall I share it with you today after the class immediately?
Yes, sir. The other day also you said you will share some video, but you didn't.
Which
Yes,
video
sir.
did I say? No, I did not say.
You said, sir.
Yeah.
You said that.
Okay, come on. If
Was
I have forgotten, you can remind me. Which video?
to
Sorry,
prove
huh?
some
I daily take classes. For me it's a issue. Please tell me.
it was
I make
related
n
to
number of commitments on a on a day. Yeah. Tell me. I'll write it here and send.
uh,
Do you
it was
remember?
it was regarding a common size statement only, sir.
Size statement, comprehensive income. So, if you can specifically tell me, I'll give that to you. I'm sending right now only. That's the reason I am just saying.
I guess it was related to OCI only. You said we can go through that video and then later on we can connect well with the OCI theory part.
OCI.
Yeah.
OCI I have explained right now.
Yes,
Well, no
anyways, we have
problem. I
explained.
think I have to give you this video only. So this video I'm sending right now. Okay.
Okay, sir.
And see, I know like many of you don't know how to make a statement. Do you know how to make a statement?
No, sir.
No. So I'm
Never, not
sending.
tried.
Yeah, I'm sending you a full-fledged question of a particular statement solved by me. That is I'm sending you from financial reporting course. That has I'm making a statement as per IFRS. I know you don't have IFRS. You're learning US GAAP, but you will not find any differences in both the countries. The statements are prepared in a similar way. Only small differences are there. Like I said, revaluation gain is followed in IFRS. US GAAP does not follow. Once you go to the statement, I'll give you like one or two differences. Whatever is there, I'll explain in the next class. That means just a brief, a small discussion I'll do with you. Okay, and that if you solve that question, you get a very good idea how the questions are solved in real world. Okay.
Okay.
Course does not deal with all solving of problems and all. There's a course called Diploma in IFRS. I usually tell all my students, if you are learning US GAAP through CMA, you can learn IFRS through Diploma in IFRS. This can give a very strong platform for you because this deals with the practical aspect of the subject. That means for solving income statements, doing consolidation, group accounts and all. So this is a very good course. Okay, you can plan that later in the future, or if you want, I train many chartered accountants have also studied with me this one. So any point of time I can train you. So I'm sending the video to you so that you can see that. Okay, how the things
Sure.
going on. Yeah.
Sure, sure.
We'll come to you,
So
sir.
yeah. Thank you so much. So this is done, and the next class what we take is, I'll just tell you. I'll just immediately inform you, intimate you what the next class would be. But before the next class, we are collectively going to solve some 20 questions on this chapter on Monday. Okay, so be ready for the class.
Sure, sir.
Yeah.
And sir, tomorrow can we connect for the doubt question? We have some doubt for ratios.
You
So
can
any convenient time?
tomorrow, like Saturday. I'm very busy tomorrow. You can ask me on any weekday. Saturday बहुत busy है कल का schedule.
कल का schedule बहुत busy है.
क्यों है बिजी बोले तो आपने सैटरडे का फ्लेक्सिबिलिटी दे दिया ना, तो दूसरे डाल दिया हमने क्लासेस.
So what we will do, I will just send you those questions so that we can
You
discuss
can
in the
send. You
next.
can send. Yeah.
वो
Monday.
question
Monday.
पूछ
Monday
के.
when we'll be sitting with the reporting questions, we can sit with them. Okay.
ठीक है.
Fine.
Sir,
Next
Okay.
chapter. Yeah.
sir,
Please tell
on
me.
what time I should come on, sir? Saturday or Sunday?
Pramod, we will discuss over the call right now. Immediately. I'm calling
Okay.
you.
Okay.
Huh?
Okay, sir.
Yeah.
Okay.
Yeah. Okay. Pramod.
Okay.
Yeah. Thank
Thank you.
you.
Will we
Thank
have a
you. Yeah.
costing class?
Costing will take, madam. I'll see if I'm not having a session right now. Let's say within some time, I'll inform you. Will take right now only then.
Yeah.
Okay. I'm setting the timings for costing on the alternate 3 days when you're not taking this class. I'm planning for that at 1 p.m. Okay, madam.
Okay, sir.
Okay.
Please call me, sir, on the time. Because
Sure. I'm informing right now. Just wait for some time. Yeah. Thank you. Thank you all of you. Thank you.
Thank you, sir.
Thank you.
Thank
Thank you. Thank you so much.